Hey there, welcome to Real Investment News. I'm Mike O'Neill. The markets are continuing their way through record high territory today, although the Dow is only up about 85, the S&P is flat, and the NASDAQ is down 30 points right now. So while the markets have been soaring lately, we are starting to see some indications that things are starting to weaken. Now, Lance Roberts spoke about this last night during his interview with MoneyStrong founder Danielle DiMartino Booth about her article, The Great Recovery.
The Citigroup Economic Surprise Index has slowly drifted down to the lowest since Thanksgiving. Nobody's talking about it.
Exactly. But
right now, but everybody's telling you that everything's perfect.
Exactly.
They need to have.
So let's start there. The Citigroup Economic Surprise Index shows how economic data is actually progressing relative to the forecast. Basically, what is expected and what really happens. And yes, it has been dropping for the past several months. So let's look at some of this real data. Just today, the National Association of Realtors released December's existing home sales. It actually dropped 3.6% from November, which in itself had to be revised downward from 5.6 to 5.1%. The reason? Supplies are at record lows and prices, as you can see here, the blue line, are starting to rise. And while home sales were up 1.1% year to year, that was the smallest increase in the past 3 years. But existing home sales is actually a lagging indicator. Knock this down. We are going to take a look ahead to new housing starts, basically the homes that are going to be ready to sell in the next 3 to 6 months. Now, I showed you these numbers last week. These actually came out late last week, and yeah, they're dropping in December as well. And we have to also now take a look at the dollar and how it compares to major world currencies like the euro and the Japanese yen. Is going down too. The US dollar index shows that it is down more than 3% so far this year. As you can see right here, we are now at a 3-year low. This is the worst start to the year since 1987. And things dropped a little bit more today because Treasury Secretary Steven Mnuchin at the World Economic Forum in Davos said a weaker dollar would actually benefit the country. Now, that remains to be seen, but the weaker dollar, that's happening right now. But for now, the Fed seem committed to raising interest rates.
And you can bet your bottom dollar that they'll hike rates come March, because we could likely see 3% GDP growth through the first quarter again as we continue to enjoy the sugar high that the economy is on.
So while the canary in the coal mine may still be breathing, might be developing a bit of a cough. So that's it for now. Please remember to follow us on Facebook, Twitter, YouTube, and you can also see more of our reports at realinvestmentnews.com. I'm Mike O'Neill, and we'll see you again in a couple of hours.